If you're wondering why people are still buying homes in Toronto when prices are at an all-time high, does it still make sense? Well, I don't know, I'm scratching my head. Stay tuned to this video and I'll explain to you why there's still a lot of sales going on. All right, so let's look at the January's activity, sales activity. First of all, price of the all homes and all housing types and all the Toronto Real Estate Board, we're looking at a 28.6% increase year over year. The detached housing market in Toronto is around 19.2%. 905 York Region has gone through the roof. It's 26.2% year over year. And downtown Toronto condos, which we liked working in because a lot of investors are down there, we're looking at the 18.2% year-over-year increase. Now, sales have actually slowed quite a bit, the number of sales. We're looking at 5,600 sales when typically it should be around, last year it was anywhere around 7,000. We typically see around 10,000 sales a year. But from this time last year, we're looking at down 18.2% lower sales. Months of inventory is at 0.7, which means that if nothing else were new or come on the market, it would only take less than a month to sell everything that's on the market. It's kind of a weird number, kind of a weird measure, but it's a good measure to look at what a normal balanced market is. And we're not in a balanced market, we're in a seller's market. Look, I don't know what's gonna happen in the real estate market, but I know that prices are at an all-time high, interest rates are low, and the reason why that people are still buying homes is because of inflation. Okay, if you look at what happened in Canada ever since the pandemic and started, say March 2020, GDP was around 2% or so, right? That means our economic output was 2%, prices are increasing slowly about 2%. Then all of a sudden it dropped to negative interest rates when everything got shut down. Interest rates, the overnight lending rate was at 1.75 and almost overnight dropped down to a quarter point, and it stayed flat ever since. The last rate hikes, when they were supposed to meet, the Bank of Canada, they didn't increase the rate hikes for some reason. It might happen in the future, but right now it hasn't, probably because of whatever's happening in the global politics, not just Canada. It's a lot of whole ripple effects and stuff like that. But the problem is inflation's running hot. We're at 4.89%, 4.8% in December 2020 for inflation. That means the price of everything, price of fuel, food, housing. Actually, housing is about 30% of the basket of goods, the measurement that they use, and food and fuel and all that is another big line item. But you're looking at 5% price increases. I would argue that that's actually a little higher than 5%, actually a lot higher than 5% if you're looking at house prices going up by 30% a year. If your cost of capital, what do you get a mortgage for nowadays? Like 1.45% or variable, or sometimes you'd get something on a on a fixed rate in the twos somehow. If it only costs you 2% to maintain that mortgage, but yet the prices are going up by 20% a year, even 5% a year, let's just call it, then you're still winning, right? You still get that delta, the real interest rates, the real positive growth is about 3% if you're looking at 5% and 2% cost of capital. Hopefully that makes sense, right? So when you're buying something for the average price of, let's say, $1.2 million in Toronto, then essentially the mortgage payments would be probably around $3,500 or so, maybe $4,000, depending on how much money you put down. That money stays locked. You buy something for $1.2 million and it'll stay $1.2 million for when you purchase it 20 years down the road, 25 years down the road when you paid off your mortgage, it's still $1.2 million. Versus if you paid for rent, that rent goes up every year, right? So if your payments are fixed and you're paying $3,500 a month forever, in 15 years, you could see how that $3,500 a month, seems like a lot right now, but in 15 years, it's not gonna be a lot. It's kind of like, saying $1,000 15 years ago was a lot of money if you're old enough to remember. But $1,000 now today, what does that really buy you if you think about it? It doesn't even buy you an iPhone anymore, The way I look at it is that if you fix in your payments and you're locking your payments now, and as long as you can qualify for the mortgage, pay it over 25, 30 years, stretch it out, refinance if you have to. It just makes sense to buy and hold real estate in the long run, and you'll end up winning just because inflation is not going away, it's here to stay. GDP is targeted at 2 or 3%, that's what the government wants to do. They're not gonna go negative, it's gonna be positive growth always because they're deflating the dollars, long story, but anyway, that's how they're doing it at the end of the day. So you can't go wrong by buying real estate at the end of the day, all right? So if you have any questions, if you feel any way about it, let me know. Put a comment in the bottom below, or just give us a shout and let's talk a little bit more about where I think real estate's gonna go. All right, thanks for watching. Talk soon.
Add it up.